The big question for the energy industry in 2016 is what will happen to the price of oil. The oil price has collapsed since the summer of 2014, and at its present level of about $37 for a barrel of Brent crude is about just a third of what it was 2 years ago. That price collapse has caused absolute havoc in the oil industry. It's meant there's been big cuts to jobs, there's been big cuts in investment, and a lot of companies have been reporting losses. It's a situation which is clearly unsustainable. The price of oil is just not high enough to stimulate the investment that will be needed to bring forth the supply that will be needed to meet demand in the future. And as the old joke goes, if something can't go on forever, eventually it'll stop. The question, though, is exactly when these low oil prices will stop. Forecasting the oil price has always been a very difficult business, and it's no easier today. There are forces pushing in both directions. On the bearish side, tending to drive prices down, there's clearly still considerable oversupply in the market, and there may be more oil coming onto the market as well from Iran. If, as expected, the deal over Iran's nuclear program leads to a lifting of sanctions, then there could be another 500,000 barrels per day of Iranian oil coming onto the market pretty quickly. Added to that, there's also concerns about the strength of global growth, and global growth is very closely tied to oil demand growth. And so certainly there are reasons why you might think that oil prices would stay low and perhaps even go lower during 2016. On the other hand, there are also forces tending to push prices up. In particular, on the supply side, we can now see clear signs that low prices are starting to take their toll on production in the US. Activity in the shale fields has absolutely collapsed. The number of rigs drilling for oil has plunged, and that is now apparently starting to have an effect on production. It's actually still held up remarkably well, US oil production, but even so, it's been on a downward trend since April, and that downward trend looks very likely to continue into 2016. There are also other oil-producing areas around the world, such as the North Sea, that will be affected by low prices. The cash squeeze means investment is dropping, fewer wells are being drilled, that means less new production coming on, and again that will tend to tighten global supply. At the same time, low prices encourage demand. So, if you put those two forces together, weaker supply and stronger demand, you can see there are good reasons why you would expect the market to tighten and prices to tend to rise over the course of 2016. Will that actually happen? It's unclear. As I said, forecasting the oil price is a mug's game. But if I was to be that mug and make a guess, I would guess that the oil price at the end of 2016 would be higher than it is at the end of 2015. Ed Crooks for the Financial Times in New York.